Hi everyone, today I would like to show you quickly how you can calculate the amount of financing that you need for your business idea. So first of all, you need to answer this question, you need to build your model. So you need to create the revenue generating algorithm. So you need to build the revenues, direct costs, fixed costs, payroll, investment plan, and then you need to bring all these inflows and outflows inside the cash flow statement. So this is the step number one. You won't be able to calculate the financing needed without building the model and building the cash flow statement. Now we are proceeding to the calculations. So if you see the last line of the cash flow statement is negative, so cash balance at the end of the period is negative, this means you need to somehow finance to compensate these losses. So this means that you need to use the equity or loan to compensate these cash gap. So you can see here negative values, and here we can see the positive values. So if you see the negative values inside the last line of the cash flow statement, inside the cash balance at the end of the period, this means that you don't have enough money, you need to rethink your business concept, you need more money to finance your business. So this means we need to create some formula. So how much money we need? So what we are doing, so we're taking the revenues minus payroll minus fixed cost minus direct costs minus taxes minus investment stage expenses. Then we are adding a loan minus interest payments for the loan minus principal payments for the loan. Then we're pressing enter. So what we're doing next, we are extrapolating this formula to the right and we are making it cumulative. So we're adding the value of this formula for the previous month, and now we're extrapolating this formula to the right, to the whole of our timeline. So now we're done with that. So what we need to do now, we need to find the minimum value of this line of our project horizon. So now we know that we need 2.2 millions. So if this value is positive, by the way, this means that we don't need financing, equity financing or loan financing. This means that our project generates its own cash, and its own cash compensates all the investment stage. So now we're going to see the magic. So if this value is negative, then we're putting this value with an opposite sign at the beginning of the cash flow, otherwise we are returning 0. And what we can see now, we can see that at this point we are eating, so we have 2.2 millions, and here we are eating our cash. So this is mathematical 0, and then the project starts generating its own cash since October 2020. So for example, we would like to add a loan to our project. So let's say we would like to add a $500,000 loan. So we are adding a loan here, and at this point in October 2020 we can see also a 0, but this time we need equity of this amount, and also we need a loan here. So total financing, so we can create a very simple table, total financing needed. So this will be, it will consist of equity, loan. Equity will be this value, loan will be, we will take the totals for the loan amount line. So this line gives us the totals for a couple of loans that we may add to our project. So in total financing that we will need will consist of equity and loan. So now you can create numerous amount of scenarios very quickly, and you will quickly be able to see how much money you will need in this scenario and that scenario. For example, we can add one more loan, let's say 200,000 amount loan. Here it is. Now we have two loans. This is how the amount financing needed changes. Then we can, for example, what we can do, we can, let's say, switch some products on. We can go back to the cash flow and see how these values change. So yeah, we can very quickly create huge amount of scenarios and see how much financing you will need in this scenario, that scenario. For example, you can decrease the amount of loan. So in this particular scenario, you will need this amount of equity, this amount of loan, and you, for example, can switch off some products. We can go back to the cash flow statement. You will be able to see how much money you will need in this particular scenario. Now you can switch more products off. You can go back. So you can easily play with your business idea, creating lots and lots of assumptions, and see how much financing you will need in every scenario very quickly. So in this particular scenario, we are going a bit further. For example, here. So these calculations are pretty automatic, so you don't have to waste your time manually pasting these values of equity and loan to the timeline, reducing the cash gap. So everything is done very quickly. So hope you enjoyed this short video. See you next tutorials. Thank you for watching. Subscribe our channel. Thank you so much. Bye bye.